All eyes on Peloton. Once a pandemic darling, the company's value has dropped from $50 billion to $8 billion over the last year. As the home fitness trend lost steam, the faithful Sex and the City episode, layoff news, and store closures, it's no wonder that it attracted activist investor attention calling for the CEO's head. Is the talk of takeover enough to save this burning ship? Let's start the countdown and find out. Welcome back to the Investor Place Launchpad, where we take a look at trending investment ideas and try to rocket them to the moon. I'm head of Mission Control Aaron Davis, and this week we're looking at the overall scope of Peloton Interactive to see where success was had, what happened, and where the fitness company might go from here. As always, before we dive in, we'd love to continue to grow our channel here at Investor Place, so feel free to hit that like and subscribe button and smash that notification bell to stay up to date with us here at the Launchpad. With all of that out of the way, let's see what's next for Peloton. Once considered the be-all, end-all of on-demand at-home fitness with the closing of gyms and millions of people confined to their homes, Peloton became a household name and increasingly popular, offering a connected fitness system that allowed users to follow remote workout classes from the bikes. By the end of 2020, the company had seen a surge of sales in its stock, rising 350% from March to December. With first-mover advantage, a great brand image, and foresight into an evolving work-from-home lifestyle, Peloton seemed positioned to corner the at-home fitness market. Fast forward to the end of 2021, and the stock price tells a very different story. As of this past December, the company has lost 73% of its value since the beginning of 2021, with shares trading at around $40. The recent HBO reboot of its cult hit Sex and the City, titled And Just Like That's premiere episode, saw a character dropping dead after a 45-minute Peloton ride. While not necessarily contributing to this dip, this, along with other shows like Saturday Night Live's Peloton sketch, highlights the company's failure to control its narrative in some of the company's perception in popular culture. Furthermore, Peloton stock was downgraded by Credit Suisse from outperform to neutral, slashing target price from $112 to $50, a decrease of 55%. As the company spends more on advertising and declaring prices, and the population does indeed seem to be returning to gyms, this could indicate a change in the economic model for Peloton moving forward. As the new year begins, it seems like Peloton's problems only continue to spiral out of control, with a poor ad campaign in response to HBO's portrayal, along with gyms starting to open. Compounding the company's woes is increasing competition from Apple's fitness subscription, along with recent rumored reports that Peloton will be releasing staff and closing several stores. This, along with a second premier subscription service portraying a character having a heart attack while riding a Peloton. This time it was Showtime's Billions, which saw character Mike Wagner suffering a heart attack while riding a Peloton bike. Eesh. The company did state that the show did not have permission to use the equipment in the episode, and followed up with a tweet stating, as the show itself points out, cardiovascular exercise helps people lead long, happy lives. It seems that the beginning of 2022 certainly is not painting Peloton to rise back to its former glory, with activist firm Blackwell's Capital calling for the removal of CEO John Foley. The letter outlined several grievances, including the CEO's lavish lifestyle, along with questionable and inconsistent business choices. Finally, the letter stated that the company should sell itself to a technology or sportswear company such as Disney, Nike, or Sony. However, despite all the unpleasantness the company has seen, it seems that last month's open letter from Blackwell's Capital has spurred some excitement from investors, with the stock up 25% as of yesterday morning and was trending as the #1 stock on Yahoo Finance. This surge follows reports that the company is attracting several potential suitors, the most interesting perhaps being e-commerce giant Amazon. While Peloton's stock certainly saw a nice bump until any deal is announced and formalized, speculation will only push price so far, and it's important to keep in mind that without a deal, the price could fall even farther than ever. Peloton's story is certainly one that illustrates the shifting narratives in response to the ongoing pandemic and how people perceive and choose at-home fitness. But what do you think? Is there a revival in the future for Peloton? Or has Peloton fallen too far for a revival? And finally, is at-home fitness still viable as an investment strategy? We'd love to hear your thoughts in the comments section below. Well, that's all we have from the Launchpad this week. If you'd like more insights like this, head on over to investorplace.com, where we release articles daily. And as always, check back with us here at the Launchpad, where we will continue to look for trends like Peloton. And as always, try to shoot for the moon.